I've been trading stocks and options for about 20 years. I got started, 2001 was a defining moment for me because that was the big painful trade that I remember in WorldCom. I got in WorldCom and had too much of my account invested in it, and it turned out to be uh, a disaster. Just got started at that age. It's like 16 years old. Dad co-signed on the account. Uh, Brushed myself off a year or two later. Come 2004, I remember the next big defining trade was I bought 1,000 shares of Netflix, and that was a position that you look back on and you kind of forget that you even had it, but you know, coulda, shoulda, woulda held on to it. $10,000 investments worth $3 million today. Um, and then from there on, like 2005 and six, I really got into options and learning how to trade options, and I was doing very well trading options. And then 2008 happened. And 2008 was a very difficult time for a lot of people, including myself, with the Great Recession and the financial crisis, and just seeing things. I was at a very young age. I was in my early 20s, and I knew a lot, but I didn't experience how fast the stock market can humble you. And people that have been trading for 10, 20, 30 plus years, people that I was educated from on the CBOE and different floor traders, like they hadn't seen that in their entire careers of 30 plus years. So the first lesson and the first takeaway of when things get tough is that you need to understand that anything can happen. Just because something hasn't happened in the past doesn't mean it can't happen in the present or in the future. And you have to have an unemotional and a completely subjective mind about your positions, about what can happen during expiration week, because anything can happen during expiration week. I've seen the craziest things happen just in the last couple months on expiration week. Oh, you'd make a great profit, you made it 100% in a day or two, and then by expiration Friday, that would have been 1,000% or more. Like I've seen the craziest things happen, and I've also experienced a lot of pain. A lot of despair, a lot of discouragement, a lot of negative emotions, a tremendous amount of lost money in an extremely short amount of time. I've experienced the pain of having too much invested on a trade and having it go against you very fast and fierce, and trying to salvage the trade and roll it out and continue to let things hopefully come back. And these are dangerous principles as a trader. So the message of this video is that if you're brand new, you know, buckle up. And if you've been trading for a while, you probably know what I'm talking about. You can get all of your 8 months of work can get wiped out in 1 or 2 bad weeks if you let it. And it's something where, you really just didn't cut losses quick enough, and you try to recoup and regroup mentally. You try to recoup your trades that are underwater. And the biggest lesson that I learned from that, because you're always learning as a trader, even if you've been trading for 20 years, you're still gonna be learning lessons. Like you never stop learning. But the thing is that there's going to be a point where you've learned a lot and you have to take breaks from trading sometimes, and you have to reflect on what you've learned so you don't repeat the mistakes again. So what I learned was I was almost at my all-time highs for 2020. Got a little greedy. Greed's a bad thing. It's a very dangerous emotion that you have to keep in check. And I was pushing positions, trying to extract some more profits going into expiration weeks in the end of October, and they just totally collapsed. It was mixed with earnings. It was mixed with all these different things. The volatility was increasing. We had the election. So in hindsight, it was a great time to be in cash. And regardless, I had a lot of pain, like for like a good 2 weeks. Like I was just like, ugh, couldn't eat because you lose a lot of money. You can feel that way. And, what I did was I just kind of continued to persevere through it. When the going gets tough, you can't quit. You got to keep pushing forward. You got to keep trading. You got to keep staying in the game. And the biggest thing that I've learned from 2008, because 2008 wiped me out. I'll tell you straight up. I'm totally honest with you. Wiped out, lost the account, got totally demoralized, and I had to basically start over. And I learned that lesson, so I wasn't gonna. That's never going to happen again. So the first thing that I would tell you is that never over allocate capital and never do option strategies that are undefined risk where you can lose an undefined amount of money, like selling a naked call is an undefined trading strategy. Those are things that I would definitely say to stay away from. And for me, I stay away from them because I've seen horrible things happen to people that have lost more than what they had because of an undefined risk trading strategy. And so the first rule of thumb is that, never over allocate on investments. Like, you have to have, money set aside for long term. Like, if you're going to trade options, like, that's definitely a large focus for me and a lot of the followers that and people that I've met with over the years that have gone through courses and things. They're getting into options, but that's a part of the puzzle. It's not all of the puzzle. So, like, you should have core positions, stock positions that don't expire. These are building blocks for a successful investment portfolio. Like, you can't go all in on call options and hope that it works out. Like, that will set you up to fail. And even with someone who's been trading for a long time like myself and has been through a lot of different experiences, you still are going to make mistakes, but you still learn from what you've done and you don't repeat the big ones, like having all of your portfolio in options and then options expire and you're out. Like, your portfolio is done. Like, that's something that you can't allow that to happen. You just can't do it. So having structure through stock positions, core positions that don't expire. Mutual funds and ETFs is another smart quadrant to have. Depending on your age bracket, there's all ways to look at that. Bond funds and so forth. But a lot of people that are getting into the stock market, a lot of people like myself that maybe have a higher appetite for risk, they have this interest in trading options, which is great. But options are risky, so you have to accept that. And even if you accept that, that doesn't mean that you're not going to go through periods of despair and difficulty and depression and questioning the entire thing of trading options and doing this. Like, why am I doing this? Because there's a lot of good times, a lot of happy highs that you're going to feel, and there's going to be a lot of depressing lows that you're going to feel. And the goal of trading and using options is to hedge risk, produce income, and to speculate. And there's all three of those kind of components that you can slice and dice them and do a little bit of each on things. But what I want you to know is that when things get tough, and they likely will, there's some things you can look at, like the VIX. If the VIX is spiking higher, that's probably a good time to go to cash and maybe sit on the sidelines or sell some calls or do things that are a little bit lower risk. And when you see things stabilize and maybe you're breaking out of a channel and you're making a new fresh high and you have a lower VIX, like around a 20 VIX-ish. I remember when the VIX was at 15 for the longest time, and now it's in 2020, it's like in the 20 to 40 range, which is a lot higher. So it's a higher volatile environment, and you just have to know how to navigate through these types of environments. Just like if you're navigating through the ocean when it's windy and there's some chop, like we've had in 2020, it could rock you a little bit easier, and they're not just as smooth sailing like they've been in years prior. So know how to read the market internals and how to adjust the strategies so that you don't set yourself up for a difficult time. A difficult time when you're just losing a ton of money, you're not having success, you're wasting your time, you're beating yourself up. These are all things these are all emotions that you experience. These are emotions that I've experienced as a trader. And what you do to get through it is you don't quit. You can't quit. If you quit, you're out. So if you keep pushing forward, and this is kind of what I did recently after a horrible 2-week trading run, is I was like, geez, what am I doing? Like, what? I mean, and I didn't quit, and I was able to recover all of it in the following month. And it's the type of mentality that it takes to be a seasoned investor that can stand the test of time, is not giving up, knowing that it's going to get difficult, but establishing rules. Like, what is my max pain threshold? Like, all right, once I lose $20,000 a day, I'm out. And it could be 1,000 a day, it could be 200,000 a day, whatever. Like, identify your max pain threshold, and when it's hit, get out. You're done. You hit it. If you have a 20% drawdown in your account, your portfolio in 1 month, you stop trading for the month. Like, if you establish rules kind of like boundaries to help you stay in the game, then you will be successful over the long term. It's when you break the rules, you put on too much risk, and you start to do things that are against what you should be doing that can get you in trouble. And that's what I want you to know that you need to avoid is you can't, and if you do break the rules, just accept that you could be setting yourself up for immense uh, difficulty, despair, depression, failure, and all these horrible emotions that come with trading in the stock market. And I want you to know that I've developed videos and courses and curriculums and different things to help the average guy or girl that's getting into the stock market, or you're just managing your investments and you want to produce income, or you want to maybe take a little more risk with options and you want to have a smart way to manage your money and to grow your investments over time. I've done this for years. I've built courses and I can help you with that at Vestalyze.com. We have an e-learning website, but Vestalyze is a tool to help you manage your investment portfolio. Like I do this, I love this business. I've experienced the highs and lows of trading, and I know that if you don't quit and you keep pushing forward, eventually you'll continue making higher highs, and that's what it's all about. And having the tools and the technology to understand your risk and to manage your investments smart and to understand your performance, being able to filter your data to see what strategies are working best, what securities you're having the most success with, what other people are doing that are having success, modeling other successful traders or investors. This is what I can help you with. This is what we can help you with. So I welcome you to head over to Vestalyze.com. I think you'll really get a lot of value from what we put together. You can open up an account. You can test drive the platform free. And if it's something that can help you, then great. And moving forward, there's a lot more videos I'm going to be putting out to help you if you're just getting started, or raise your game if you've been trading for a long time. And it's all about helping each other, sticking together. It's a sea of money out there. And the way I look at this to kind of close out the message is that the rising tide lifts all ships. We're all on our own ship. We're all on our own path. We're all on our own journey. If you have the tools, you have the knowledge, and you have the vision, then I can help you get there. Head to Vestalyze.com, and I'll see you.